Dabur now, and before I connect with the management here, let me just make the case for the case of chat. Now we've seen a big revival in the consumption demand, and if the last volume dispatch numbers or volume growth data is anything to go by for the industry, and if I even put in the base effect of the demonetization adjustment, the volume demand seems to be strong. There is recovery in key categories, and international revenue also for Dabur has looked better. So how exactly are things panning out for the current quarter, both for the local business and the global business, and which are some of the key categories which could see strong double-digit growth in coming quarters? Let's discuss all that and much more with Sunil Duggal, CEO of Dabur. Sunil, good morning and thank you for joining us. Sunil, last time when we spoke to you was immediately after your Q3 numbers, and you were quite optimistic about the volume growth, and your the sense which we got from you was that the numbers were strong despite the demonetization base adjustment. So do you think the volume growth so far in this quarter also has been decent?
Well, we'll know in the next few days how good the growth is. But when I referred to the numbers of Q3, it was partially on the back of a very low base of the base quarter. So we grew volumes by 13%, revenue by 17% for the domestic consumer business. Obviously, the underlying demand does not support these growths, so they'll moderate when the base comes into place. What we do envisage, however, is that next year the volume growth will accelerate. We do believe that now that the monsoon predictions look favorable, and also the stimulus which the government is bound to provide to the rural economy in particular will drive demand upwards. So we are looking forward to, if not double digit, at least very high single digit volume growths in the next fiscal. But the Q3 numbers were a little bit on the high side on account of the low base.
There's enough and more data point which seems to be indicating that the demand resurgence in the rural economy is making a comeback. And since you are a rural facing FMCG company, and the delta for your business will be more rural rather than urban, our markets, are we right in assuming that the rural demand is going to surprise everyone this year?
In the next fiscal, yes. This year I don't see much rural demand happening, even in the current quarter. If you take the data, syndicated data in terms of growth, both urban and rural, for the key categories such as toothpaste and hair oils, etc., it's still pretty muted, low to mid single digits. So nothing to get excited about here. But I do, as I mentioned in the past, see a resurgence of demand happening in the next fiscal, and we're looking forward to hopefully double-digit growths, but definitely in the high single digits in the year ahead.
Okay. Mr. Duggal, let's talk about various segments then. Despite a significant step from your large competition in the natural as well as Ayurvedic segment, your growth has remained extremely strong in the oral care segment. What, according to you, has aided this kind of growth?
Actually, the growth has been pretty secular, with the exception of beverages, where we've seen actually muted growth, especially in the context of our past growth, which was the strong double digits. So at this point in time, it's trending in the low, in the mid single digits, or mid to high single digits. So that's a little bit below expectations. I do expect, however, the beverage growths to inch up given the hot summer, and also the demand acceleration, which, like I mentioned, would happen. But other than that, if you take categories such as personal care, even hair oils did extremely well last year. Shampoos did very well. Oral care, of course, has been doing consistently well. Then healthcare brands like, say, honey did extremely well. So I think it was pretty wide ranged, and with the exception of beverages, we did see good growth in the third quarter, and we should continue to see that growth happening. Of course, not to the extent of the third quarter, but still in the high single digits or mid to high single digits in the quarter or two ahead. And then, of course, we do believe that perhaps as early as the first quarter of next fiscal, the growth should accelerate, and we should end next year on a much better note than this year.
Mr. Duggal, tell me about household insecticides, because that's a segment, as we understand, which has been struggling for the last few quarters. Your peers have called that out as well. The debate on household insecticides usage being out of consumer habit versus seasonality still persists. What, according to you, is the nature of household insecticides usage, and why the weakness in this segment?
Well, there are two key drivers here. One is, of course, seasonality, and the other one is epidemics. So, if you have both, then the sales grow, and otherwise the sales are muted. So, we do see volatility here. And having said that, we are really in the personal applicator space as far as our insect repellent portfolio is concerned. And we do believe that it is highly underpenetrated because while in-home is much higher levels of penetration, out-of-home is much lower. And we do expect that this will grow, especially since this is not really an insecticide. It's harmless and doesn't have any of the negative ones which the insecticide have. So we do expect that this is a brand which will continue to grow. We just scratched the surface of its development, and we have very high hopes for brand Odomos.
What is your guidance on ad as percentage of your total sales? It's such a variable number that when FMCG companies, they want to save money, they want to protect their margins, they really can alter this number.
Sorry, which number you meant?
Ad sales as percentage of your total sales?
Oh yeah, of course. No, that will accelerate. There's no doubts about it. Of course, we cut back on advertising in the current fiscal, particularly in the early part of this year. The first half was very muted in terms of the ad spends because of the GST and demonetization effects. The demand also was crunched quite a bit. So on the back of a comparatively low base of this year and even of the last year, I think we'll be growing our media spends very, very aggressively. Now, having said that, we'll probably like to cut back a little on consumer promotions and trade promotions. Let's see to the extent which we can, but the overall advertisement spends would definitely grow in the strong double digits next year.
One of the pet themes from a market standpoint is that post GST, a lot of unorganized sales will move to the organized sector. Are there some categories where you are also experiencing this change in demand pattern where you are gaining and other listed players, organized players are gaining because unorganized players are losing market share?
Few categories, yes. I think hair oils, we will see some erosion of share of the unorganized sector. But if you take many other categories, let's say like shampoos or toothpaste, there is hardly any unorganized sector left. Everything moved over to the organized sector a couple of years ago, even earlier than that. So I don't think there'll be any gains on that account. But categories like I mentioned, hair oils would stand to gain with the introduction of GST. I think we will benefit from that.
Not getting into specifics as to what's happened to a category of raw material or a B category of raw material, on an aggregate basis, what is happening to raw material prices? Are you in a position to increase prices, or right now you will be forced to absorb them?
Well, I don't see any margin erosion at the gross margin level happening next year on account of inflation. Even though the inflation levels will be much higher than what we experienced in the last couple of years, but we should be able to take up prices to mitigate that. And I do see margins being pretty flat at the gross margin level, at least in the next fiscal. Maybe we'll try to trend it up a little bit through better management of costs at the plant level. So inflation is not a big concern. I think we have the means and we have the pricing power to deal with it.
Okay, I want to talk about your international business as well, Mr. Duggal, because that's recovered, but there has been some margin compression there as well. Do you see things reviving anytime in the near future?
Yes, I think you would see a strong revival in the margin delivery of the international business. One is that the translation losses which we're experiencing on account of sharp currency devaluations will be comparatively muted in the next fiscal. At least that's what we expect. So that would be one huge area where the margin expansion would happen. The second is better management of cost. I think the costs in the international business, given its very high growth rate in the past few years, except for the last two, the costs also mounted accordingly. And when the deceleration happened, we had to cut costs, which obviously takes a bit of time. So I think now we are in a situation where we have a much leaner infrastructure in the international business than ever in the past. So that would also help in aiding the margin recovery. Now, having said that, we would also be spending considerably more on advertising, like in the India business, because we have underinvested in that area over the last year or two. But despite that, we would see definitely double-digit margin expansion happening in the international business.
So tell me, Mr. Duggal, you know, looking forward 2 to 3 year hence, what's that big innovation that you're planning to do at Dabur? Any new product, any category specifically where you think there is growth visibility and you need to bring on board some innovation in your products?
Well, the maximum area of investment in terms of infrastructure building, etc., and the domestic business is in consumer health. Now, it's a slow journey, so I don't think it's going to be very visible in the next year or two, but it's something which we are very committed to, and we do see that it being a long-term driver of our growth and profitability. So this is where the infrastructure building will happen. This is where you'll see a lot more activity, a lot more of the RX to OTC switches happening, a lot more prescriptive support infrastructure being built. So a lot of things happening in consumer healthcare, and the results will will be evident. I mean, some of them will be visible this year and next year fiscal, but even more so, we would accelerate our focus and our share of the whole portfolio towards consumer healthcare in the years ahead.
Oh yeah, that's surely where the consumer demand as well is tilting towards. Can personally say that too. Mr. Duggal, pleasure speaking with you. Thanks so much for taking the time out.
Pleasure. Thank you very much.